California's largest insurer, State Farm, is proposing sizable rate increases for its residential insurance policies in the state, potentially impacting millions of homeowners and renters. The company has filed for a 30% rate hike for its homeowners insurance, a 52% increase for renters, and a 36% escalation for condominium owners. This marks the third major change for State Farm in California within a year. In a statement, State Farm indicated that these rate increases are necessary for the long-term sustainability of its California subsidiary, State Farm General. The company cited increased costs and risks, particularly those related to natural disasters like wildfires, as primary drivers for the proposed hikes. State Farm General is working toward its long-term sustainability in California, the company stated. The rate increases are driven by increased costs and risk and are necessary for State Farm General to deliver on the promises the company makes every day to its customers. This isn't the first time State Farm has adjusted its rates due to external pressures. Last December, the insurer was approved for a 20% hike for homeowners and condominium owners' policies. Additionally, State Farm stopped selling new home insurance policies in California last summer, attributing the decision to wildfire risks and rising construction costs. Due to historic increases in construction costs outpacing inflation, rapidly growing catastrophe exposure, and a challenging reinsurance market, State Farm General explained in a May 2023 statement, "We are compelled to make these adjustments. In the past year, State Farm has taken multiple steps to mitigate financial risks and remain competitive in the evolving insurance market." Alongside the recent rate hikes, the company expanded its operational strategies to better assess and manage the growing threat from natural disasters. These strategic measures include leveraging advanced predictive analytics and investing in cutting-edge technology to improve disaster response and claims processing. Here are some newsworthy developments in the last year. The company was downgraded by AM Best for their financial strength rating from A to B for fair. This was a significant move as it reflects a reassessment of the company's financial standing amid rising risks and operational challenges. An announcement of non-renewals for 3 specific zip code concentrated its risk management efforts in these California areas, where wildfire risks and other hazards have been notably high. The targeted measures are part of the company's broader strategy to mitigate risk in vulnerable areas. The latest update has been that non-renewals have been rescinded with stipulations. As of April 2024, State Farm will no longer insure fire coverage for certain customers up for non-renewal unless those customers opt into the California FAIR Plan. This shift is aimed at managing escalating wildfire risks while still offering an alternative to affected policyholders. Also, leadership and strategic shifts. State Farm's CEO has implemented several strategic measures to strengthen the company's market position and operational resilience. These changes have been pivotal in navigating the turbulent financial landscape and responding to increasing disaster frequencies. In December 2022, State Farm approved for a 20% rate hike for homeowners and condominium owners' policies. Following that, in the summer 2023, State Farm ceased selling new home insurance policies in California, citing wildfire risks and rising construction costs. In May 2023, State Farm attributed the need for adjustments to historic increases in construction costs, growing catastrophe exposure, and a challenging reinsurance market. The most recent filing, State Farm proposed another 30% rate hike for homeowners insurance, a 52% increase for renters, and a 36% escalation for condominium owners. California Insurance Commissioner Ricardo Lara expressed concern about the filings, stating, "State Farm General's latest rate filings raise serious questions about its financial condition. This has the potential to affect millions of California consumers and the integrity of our residential property insurance market." Lara assured the public that his agency would investigate State Farm's financial situation thoroughly, including potentially holding a rate hearing. Nothing changes today for State Farm policyholders as a result of these filings. "We are going to lead with facts to make sure Californians are protected," he added. The proposed rate hikes could significantly raise the financial burden on homeowners, renters, and condominium owners. Increased insurance costs may make it difficult for some to maintain or renew their policies, leaving them more vulnerable to financial loss from natural disasters. Renters, who already face challenges in finding affordable housing, could be hit particularly hard by the higher cost of renters insurance. The broader community may also experience instability in the housing and rental markets, especially in areas prone to natural disasters. This situation underscores the growing challenges posed by climate change on the insurance market, not just in California, but also in other states vulnerable to its effects. A growing trend: State Farm is not alone in its struggle to balance risk and profitability. Following its decision to stop offering new home insurance policies, Farmers Insurance, the second largest provider of homeowners insurance in California, also began limiting new policies, citing high costs and wildfire risks. Similar trends are observed in other states vulnerable to climate change, such as Florida, where farmers recently stopped offering home, auto, and umbrella policies. Customers with questions are encouraged to speak with their local State Farm agent. The agent can review the customer's policy, including deductibles and coverages, said a company spokesperson. State Farm's proposed rate hikes highlight the increasing financial pressures faced by insurers and consumers alike, driven by the growing frequency and severity of natural disasters. The outcome of this rate increase request will likely set a precedent for the future of residential insurance in California and potentially influence broader trends in the industry. For now, the California Department of Insurance's investigation and subsequent decisions will determine the immediate impact on policyholders. One thing is clear: the landscape of residential insurance is rapidly evolving, and both insurers and consumers must adapt to this new reality. Thank you for tuning in to Insurance News Updates. We value your feedback and would love to hear from you. Have you received a non-renewal notice from State Farm? Please share your experience with us. Don't forget to hit subscribe for more updates and stay informed with the latest in insurance news. Your engagement helps us bring you the information that matters most.